All right. Good afternoon, everyone. Hope you guys are well. It is 4 o'clock on Friday afternoon, March the 15th. I hope you had a productive week. We certainly did. A lot of volatility in the markets this week. And as you can tell, this is the second straight losing week on the S&P 500 index. Most of that is caused by hotter than expected CPI and ultimately the PPI data that we received on Thursday morning. Now, if we take a look at the CPI data, all right, let's just quickly go through that. We saw core was hotter than expected, 3.8%, and the headline CPI was 3.2%. But the interesting thing is, even though we registered a hotter than normal CPI, the market still went up on Tuesday. All right, on Tuesday after the data was released, excuse me, we hit the trend line here and actually went to 518 subsequently on Wednesday morning. And we've been pulling back for the last 3 days quite a bit here from 518 range all the way down to 509. And we just closed the index red on the week, but only by 20 points on the SPX. Now, my only comment on that is the fact that, okay, if this was 2022 or 2023, and we got a hotter than normal inflation data, wouldn't we be losing like 100, 200 points on the index by now? But here we are. We ended the week only about 20 points down from the prior week's closing. So SPY was 511 last Friday afternoon, and now it's at 509. So the very wide range of movement that we saw this week. We started the week at 508 at the lows. We went to 518 and we're back here at 50. We actually at 508 today again and bounced from that, and we're back at 509. So the market is absolutely trying to figure out what to do with this data. Certainly, there's a lot of great support in terms of the technicals go, and we'll go through that. But now we're going into next week, and it's the big FOMC week. So let's take a review here. Monday, you're not going to have much data. 3 months, 6 months, bond auction, not a big deal. Tuesday, building permits, housing, not a big deal. All right, it's all about Wednesday, 2 p.m. Tune in, folks, at the FOMC decision, and of course Powell at 2:30 p.m. Now, it's almost assured at this time there's going to be no rate cuts, no rate hikes, but another pause going into this meeting. Whether or not Powell will sound dovish or hawkish is going to be kind of concerning, right? The market's a little bit concerned if he's going to come out full on hawkish because of the most recent CPI and PPI data. But I want to remind our viewers is that the Fed's preferred gauge is the PCE. And we saw that the last PCE was soft, okay? It was softer than normal, and that's why we spiked about a couple of weeks ago. All right, but it's 99% sure at this point there's going to be chances of just a simple pause, whether it'll be hawkish, dovish, we don't know yet. But let's go ahead and take a look at the technicals. Now, this is the weekly view of the S&P 500 index, all right, the SPX. You can see why there's some technical resistance. We're trying to break higher, right, into this trend line. We saw that happen last week at 518. We saw 518 on Wednesday morning. All right. And that immediately got rejected. We went to all the way down to 510, jump back up, and 508, jump back up, et cetera, et cetera. So it's just been a very volatile market. VIX is slightly up this week as well. All right. So no telling where or we're going to end up. But I'll tell you, we're starting to touch that 5-week moving average of 508.34. If we close next week under that 508.34, watch out, folks. I do think that we're going to eventually pull back to fill. Number one, there is still a gap on the S&P 500 index on the shorter time frames. That's about 30 minutes here. So there's a gap all the way down here at 50.81. That's about 507. If we pull back to that, that's not necessarily a big deal breaker, but certainly a lot of cause for concern to see, well, we still have this 497, 49.85 gap below as well. So there could be a lot of choppiness and a lot of up and weird movements over the next course of the week, especially headed into Powell. So I want our viewers to be careful next week of this slight downturn that we're seeing over the last couple weeks. All right. So this is this particular 30-minute chart has been kind of our guiding light this week, right? So we started. So this is Friday, Thursday, Wednesday, Tuesday, Monday. So we started Friday. We got to the highs on last Friday, right? And we dipped all the way down into the pre-market on Monday morning, and we jumped right back up, and then even into right. We hit that 508. All right, we hit the data highs on hot CPI, which is still interesting to me. Broke down, cup and handle structure, try to pop this 517 mark, couldn't do it for a period of 2 days. I mean, virtually a day. On Wednesday, Thursday morning, we saw that big pop. All right, sorry, Wednesday morning, we saw that big pop, and then of course that got rejected. But now, take a look at this. You got a little bit of a rise, falling wedge look on a 30-minute chart. And in addition to that, I'm going to go over the smaller time frames here. Our longer time frames is 4 hour. Now, this is kind of a little bit concerning to me, right? It's not necessarily a deal breaker, but this is the first time that we closed the 4-hour candle under the 3450 cloud, and we haven't been able to do. And the market, the bulls have not been allowing that to happen all the way back until from January 31st. Okay. But you see what happened right after that candle closed under the 3450 EMA here. It actually just jumped right back up. So I wouldn't be so surprised, guys. On Monday morning, we get a little bit of gap up, even though the closing didn't seem all that bullish. Look what happened yesterday, right? A lot of folks got trapped into this swing. All right. We hit 511 or 512, which is a 30-minute trend line, which is a great scalp, ladies and gentlemen. No doubt it was a 3-point scalp. However, it dumped all the way back down just as we opened OPEX Friday. All right. So a lot of the weakness that you're seeing today, too, is also related to OPEX as well. So look at your 4-hour stochastic as we head into FOMC. Every single time that we have dipped on the 4-hour stochastic, we've been getting really, really good results from this particular technical strategy. No telling if it's going to work again, headed into a major week with Powell and FOMC. So every time they dip down the wall of worries and what ifs, the market gets scared, right? You recycle the stochastic and the buyers start stepping in. All right. So the 4-hour stochastic is actually pretty low here, and it's lower than the most low of recent of back to February 21st. If this starts to curl, ladies and gentlemen, and you get a Powell that's not exactly too hawkish, you might end up squeezing on Wednesday. All right. So we're carrying a little bit of calls into the weekend to see that happen, to see if this technical strategy is going to play out again. But I remind you here on the 30-minute chart, now this is just a big old falling wedge on the 30 minutes. So it doesn't look too terrible. It doesn't look too bad. You could get a little pop out on Monday. And mind you, on the SPX, we do have a small gap to fill all the way to, let's see, this chart is not showing it to me. We do have a gap to 5140s, I believe. Yes, we do have a gap to 5140s. It's not displayed here, but there is a daily gap on the SPYs as well. All right. So next, what do we want as our targets next week? Okay, so this gets a little tricky, right? We're sitting here on the 20-day moving average at 509.75, which is good, but unfortunately, the Q has already lost its 20-day moving average. Yeah, and it's starting to move, particularly potentially into a volume gap all the way down to 426. I would not be so shocked, guys, that we end up Monday, Tuesday red. All right, I will buy the dip, and if that's the case, that the wall of worries are building up on the market of potentially bad Powell, the big bad wolf coming to town, on SPX highs. I think that's a good opportunity to play the reverse, all right, to be a contrarian guy, all right, and go deeper into calls on Monday, Tuesday morning, if we get those dips that we want. Now, of course, if we also pump on Monday, Tuesday ahead of the event, then that gets a little bit tricky too. So here you go. My upside targets next week. I think we're gonna because that we are a little bit oversold on the shorter time frames, especially the 4 hour. I think we're gonna come right back up to 514, guys. Probably Monday, Tuesday before the event. All right, so you can see a quick whipsaw right back to 513 to 514, and I think if that happens and Powell's just not that bad, I think you just dump right back down to 508. All right. So I'm going to keep my downside target, all right, the same support at 508 with the upside target of 514. I think it's just going to be a lot of volatility. It's going to be a little bit hard to forecast what's going to happen, especially with Powell next week. But there's my estimates, 514 and back to 508. Now, our target this week was 508 and 515 and 518, sorry. And we actually hit both, all three of them actually over the course of the week. But here we are back to 509, back to 508. You know, it's just been a kind of whipsaw market. Now, of course, on a 30-minute chart, guys, this is a major area we got to overcome. So if we are to hit that 514, you need to break this trend line resistance, which is going to be on Monday, probably 512, upper 513s. All right. If we could break through that, it could be a nice little bull trap to play into, right? It could be a bull trap up here. Right. But I think at the lower it goes, even let's say we go fill this gap at 507, then I think that's a bear trap down there headed into the event. All right. So, guys, there you have it. That's my targets for next week. Now, just a couple of thoughts, you know, regarding NVIDIA. I do like NVIDIA here, guys. This looks kind of to me like a bull flag setting up your NVIDIA 4 hour. I'll talk about that, that we've been kind of tracking. And it's still above 872, right? That's the magic number on NVIDIA. It hits that 872 and just pops right back up. So I think on Monday, because there's going to be an event at the end of the day, we may see a little bit of weakness on NVIDIA if they don't announce anything super exciting. You know, it's just a keynote speech by Jensen. All right. So you may end up right back towards that 860 area, but then that serves as a potential launch area. All right, if something good should happen from the event. So we'll see what happens. But I don't have a downside or upside target for NVIDIA, but just gonna have to see. But that's kind of like my projected move over the next course of the week. You know, Tesla, guys. All right, still not messing with Tesla. It actually closed above 160 today. You may end up getting another bear flag out of the daily Tesla, but I eventually think that Tesla is going to hit the 152 support. It actually hit 165 this morning and quickly rejected that because that was a prior support, now turned resistance. So we're here at Tesla at 163. I do think it's going to come down to the April 2023 lows. Below that, it's just going to be 146. There's a small gap to fill here. It's just not looking good. I just stay away from the stock until something better. I think you can get a better price on Tesla. You know, with Apple, not much to say here. Apple did have a great day towards the end of the day here, consolidating within this range. You know, well below the 20-day moving average. They did end up filling this gap here. You still you have higher lows from last week. And you got some buying volume into Apple, which is good. But, you know, Apple really hasn't done much to carry the weight of the market. It's mostly NVIDIA. And over the course of the last couple of days, yesterday we saw 4 of the Mag 7 take off, such as Microsoft hit all-time highs. Amazon took off yesterday. Google took off yesterday. And the rest of the market did not do much. And today, the chips, right, the semis try to carry the market. NVIDIA actually paired most of its losses, but you can see that, yes, we crossed the 50-day moving average, but Google is just starting to take a break here. And of course, Amazon lost its mojo right above near the 180 mark that we played it, but ended up closing near that 20-day moving average. And another one is AMD. AMD is a very good watch going into next week because it actually broke out or actually bounced from the prior breakout level, which is right about 184, 185 area, and close above the 20-day moving average. So AMD has a good opportunity here to go long. Probably, you know, we'll watch that into next week. Hope you guys have a great weekend. We'll see you guys back on Monday.